Ram Reddy, Joint MD at Balaji Amines, joining in on the show right now. Ram, hi, good morning. Good to have you on the show. What was the reason for, firstly, a strong second quarter performance? Was it primarily because of good production mix or product mix rather? Or was it a combination of good demand, high capacity utilization, and stable raw material prices?
See, it was a good product mix, as I said earlier in my earlier news. Also, we said that it is a good product mix, product combination that all the products, like many of the products, were in full good demand in the current market scenario. That was only, and the majority of the plants were running at higher capacities, and raw material prices were stable for the long term. So that was the main reason to give the good results.
Right. Is the current performance sustainable, and do you have demand visibility for your customers?
It's very difficult to say with the current scenario because of the situation we are passing through. But yes, definitely the current past 2 months and current month also, what we can say is we are on the track what we said in the projections in the earlier interviews. So we are on the track, but that's what I can say.
Mr. Reddy, good morning. What are the utilization levels that you're operating at the current gross block, and are you running all your plants at optimum levels?
We are doing almost 90-95%. We were operating all the plants. Only one plant, that is the DMF dimethyl formamide, which we are not doing very well because of the dumping from the other place. But past 2-3 months, it is giving good this thing because other competitors from the outside country have improved the prices. So that's the reason we feel that in the coming quarters, the DMF also will come into the more than 50 to 60% capacity utilization. So other than this, all other plants are doing almost to 85 to 90% capacity we are utilizing.
And with the new capex that's due to come on stream, what kind of revenues are you foreseeing? And is the 1400 crore rupees a realistic expectation? And how much will your subsidiary contribute?
We can see once this expansion finishes in the peak, we may reach about 1400 crores annual revenue we can expect. This I'm talking about the standalone, without the considering the subsidiary, which is giving almost 120 crores. We are expecting this current year itself, which has started just last year only. Last quarter only, we are the full swing of that Balaji Specialty Chemical, which is a subsidiary of the Balaji Amines. So if we calculate all put together, it may cross the peak on consolidated basis. It should go more than 14 to 1500 crores.
Okay, and what kind of margins can you clock at full utilization with the new blocks? Possibly 25% EBITDA is possible?
See, this new block which is adding, you cannot expect immediately these type of margins. Once it is stabilized, yes, definitely we guide like 20 to 22% minimum EBITDA margin should be there. Sustainable, I can say, in any worse situation, it should be 20-22%. Last quarter we have seen, I think 24-25% we have seen. If things goes like this like stable in the raw material prices and demand in the products, what we have seen in the past 2-3 months, if it continues, definitely we can see 24 to 25% EBITDA margins in the coming quarter also.
Okay, the PLI scheme as well. Are you seeing benefits of that? Are you looking at enhanced demand from customers on the back of that as well?
That should give definitely good demand for us directly, indirectly, because indirectly many pharma companies, they are taking this benefit and they are increasing their capacities to take advantage of the current scheme announced by the government of India. So indirectly, the demand for our products as a raw material, as an intermediate, definitely we will have the advantage. And our announcement of this new expansions, which will also give the good meaning what we have announced in relation to this PLS scheme.
What will the pharma contribution be going forward? It is used to be 50%. Now will it be more higher range of 60 to 70%, you think, seeing that pharma seems to have taken off in a big way?
It looks bright. What we can say, we used to do 50%. Definitely more than 60% of our total basket goes to the farm and API. On the new expansions, which the new plant which is coming the next quarter, and new expansions which we are talking today, which may come in next 10 months time. All these things mean for the majority as an intermediate for the pharma industry. So definitely that will give boost, subject to the stable raw material prices and stable policies, what we can say.
Sure. What about the export demand? Because you used to clock in about 15 to 16% of sales. Has this been inching up? And what about the anti-dumping duty? Is that really plausible for your sector?
See, definitely the exports demand is also growing. Like what we were doing 15 to 16% earlier, now we are aiming to 20 to 25% over a period of time. Like coming 1 or 2 years, we should achieve more than 30% of our total revenue should be from the outside country. As regards anti-dumping, yes, there are a couple of products are actually eligible for the anti-dumping. One is already there, and second, we are fighting with the government of India for last 3-4 years. That's what I was telling a few minutes back, that that is dimethyl formamide. Actually, speaking, this product country's consumption is about 60,000 tons. So we are our capacity of 30,000 tons earlier, and now we are planning about another 30,000 tons new expansion. So definitely there's a good calculations and eligibility for the anti-dumping. So we are fighting. We are hoping that government will take a right decision. So once that is taken, then we will have the good growth in the utilization point of view. Like we were utilizing only 30% earlier. Now this time we are expecting 50% over a period of time. We should be in a position to utilize almost to 80-85% of the capacity of the plant, which is 30,000 tons presently.
Okay, we'll let you go on that note, Mr. Reddy. Thank you so much for joining in and giving us a sense as to how business is shaping up.